What is going on, guys, and welcome to episode 4 of the 2K Options Robinhood Trading Challenge. And in this series, we started a Robinhood account with 2K and we are trying to grow it to 3K as quickly as possible. The rules are simple, options only. That means no stock positions allowed. In this video, we are going to cover all the trades that were made during the week of August 22nd and see how much we were able to profit. Before we get into all the trades, make sure you hit the like button down below. And if you haven't already, make sure you subscribe for more videos like this one. The thought going into this week, so it was around August 19th over the weekend into August 22nd, was that the market would tend to level off, that we would kind of trade sideways here for a couple weeks, and then the market would make a decision as to whether it wanted to move up or down. What we could see is the market did not do that. The market immediately decided to gap down on Monday, and then on Friday, we had another huge gap down. So these are two key days that we did not want moves like this, and we ended up getting moves like this, and it drastically affected the account this week. So let's go ahead and jump into all the trades that happened over this week. On Friday, August 19th, we ended up making our first trade, and we made it for Monday, August 22nd. So we came down here to the 90% mark, and we were thinking, the market's gonna, trade sideways, not do anything crazy. So we came down here to 415, 414 put credit spread, and we end up only being able to collect $7. And this is more the same that we've seen over the last couple weeks, where we make this trade on Friday and the market just does not cooperate with us on Monday, and this trade ends up going south very quickly. So you can see here, I was trying to collect $8, waiting for it to go through, and we end up only collecting $7 on this trade. As mentioned, last Friday, we actually made that trade. On Monday, the market gapped down, and you can see here that it closed around 413.35. So what we ended up having to do is closing out that trade at a loss. Here's a screenshot of that loss. So we ended up closing out the trade at 12:54, around 1 p.m., and we closed it out for $69. So we originally collected $7 in premium. So we, in total, took a loss of $62 on this trade. But overall, you could see that the strikes were 414, 415, and the market ended below our lower strike. So we would have incurred a full $100 loss if we had let this go throughout the day. Instead, we decided, let's close it early. Let's just save a little bit of money. The market was trading really far down and just stayed down the whole day. So we weren't expecting a bounce back. We just said, let's try and cut our losses and get out of this trade. And we were able to do that again for a $62 loss. So not a good way to start the week. So on Monday, when the market was gapping down, we took a look at the account and we said, this is a perfect time to trade more put credit spreads because we can go further out of the money. So we opened up the options chain and we decided to go further out in time. These further out in time trades tend to be the ones that I'm doing better on. So what we see here is we go down to the 90% chance of profitability, and we see this 402, 401 strike. You can collect about $10, $10, and that's what we end up doing. So we end up going out here and trading this, and this what ends up being one of our best trades of the week. Again, further out in time seems to be the play, and that might be where we kind of trend more towards. So you can see we get the fill here for $8. Trade number 3, we ended up making on Monday as well. So we went out to Wednesday, and again, the market was trading down. It was going super down. So we went out here, we looked at the 90% chance of profitability again, and we looked at 406, 405, and what we could potentially get there. And it looked like $8, which seems good. That's a decent amount of premium to collect on a put credit spread. So we went in here, we put the order in, and we end up getting the fill for $8, like you will see right here. So I keep getting myself into bad positions where I am forced to kind of recover throughout the week. So we go in here again. This is trade was made on Monday. So we go back to Wednesday and we're like, we need to get more premium. The market's still trading down. So we go to the 404, 403 and trade another put credit spread here. And here we are only able to collect $7, but we do end up getting the fill. This next trade is a trade that we have not made before on this account. Personally, I've never made this type of trade, and this is a call debit spread. So over time, I think the market is eventually going to go back up and go back up to, decent levels of where it's been at previously. And I chose the call debit spread of 117.5 to 120, and you can see our max loss is 115, and the most we can make is 135. So overall, personally, I do like this trade. I think it's a little bit longer term to kind of mitigate some of the short-term trades that we're making. So we end up putting the trade in and we get the fill for 112. And we did the same thing on another company that I love, SOFI Technology. So I personally do really like this company. I have a couple videos out there. Go check them out if you haven't already. But the market just was kind of bouncing back down, and I saw, another opportunity. I don't think SOFI can go much further down. It's kind of capped out around like $5.50. So I was kind of looking at this. I thought there would be an opportunity in here, to collect some premium. So I went with the $6 and $7.50 spread here, and you can see our max loss is 53 cents or 55 cents, and then our max profit is 95 cents, so $95. So overall, we do end up getting the fill there for $54. So we did end up seeing a little bounce in the market on Wednesday. And when I saw that happen, I thought, okay, this might be a good time to get in and get some call credit spreads in, just in case the market does go a little bit lower. So we, again, ended up looking around the 90% mark, 423, 424, and we end up getting the fill here for, I believe it was $9. We'll see here in a second. But again, this was kind of just us looking at the market, seeing what was happening, seeing that it was bouncing up a little and trading against it, and we get the fill there for $9. And again, on Thursday, we saw the market start to look like it might bounce up again, and I thought, okay, maybe we're going to go back towards highs. So I traded a put for Friday, thinking that, okay, the market's kind of gone down a little bit and now it's leveling off / maybe bouncing up a little. So I went back out to the 90% mark, and I saw this 407, 406 spread, and this just does not work out at all. We see what happens on Friday. I'll show you the closeout of this order, but we end up getting a fill here for $8 on this trade, on this put credit spread. And again, it just is it's another bad trade where the market just did not cooperate. So again, on Friday, we see this huge gap down. Basically, Jerome Powell came out and said some things that the market did not like at all. And we see this huge gap down to 405.31. So that was below our lower strike on that put spread that we just traded. And here's the closeout order. So you can see the 406, 407, and it ended up getting closed out on its own by Robinhood. I'm not sure the exact reasoning. I'm guessing they were trying to basically protect it from being a max loss. So they closed it out, which I'm actually fine with because they closed it out for only $25. And you can see, obviously, it went well below our 407. It would have been a max loss trade again, but Robinhood closed it out early and, for only $25. So overall, that's pretty decent, pretty good that it closed out, and we only really incurred a loss of, around $17 on this trade. So here we have another trade that we haven't done before. We're actually trading on Amazon. We're doing the same thing. We're trading a call credit spread here. But on Amazon, some of these other stocks, you don't get very good volume. So SPY tends to be where we stick. But here, again, we kind of saw the market. We saw it going up on Thursday, and it seemed like a good time to trade a call credit spread because I figured on Friday, maybe we'll end up with a flat market or not a whole lot happening because, again, everything was up a lot on Thursday. But, the market ended up tanking, which still worked out for this trade on Friday. But overall, we were looking at the 140, 141 call credit spread, and I believe we end up getting a fill for $9. You can see here that it's kind of 8. The bid is around 8 cents and ask is around 11, but we end up, getting the middle ground here of $9 on this trade. Here we have the spreadsheet where we track all of our trades. So again, week 1, week 2, week 3, and then week 4, we just entered down here. So what I've done is I've kind of split this out a little bit. I put the call debit spreads down here so they aren't added up in the totals that we have over here. And then we could see here all the put spreads, call spreads that we traded this week. So again, the loss that we encountered on Monday when the market gapped down, and then the loss again that we encountered on Friday when the market gapped down again. So when we add all of these up, we can look at the sum, and in total we lost $38 this week, which honestly is not terrible for how bad the market acted. Again, I think we definitely could have traded these better. I don't think the over the weekend trades are probably a good idea, and I think probably trading out a little bit further in time is going to do us a lot of good. So maybe if we start trading, on Friday, just put in a few trades for Friday already at the start of the week, especially if we see the market move up early in the week or down early in the week by a lot, then just put a trade in, for a little bit further out in time. And really what I've been focusing in this series is trying to keep the trades to 1 week because they just work easier with the video. But I think if we go a little bit further out in time, we're going to be a lot more successful, and that might make these videos a little bit more entertaining to see actual good trades instead of basically the kind of day trading that we've been doing so far. So again, put the Google and SOFI trades down here. So the 112 that we spent and the 54. So if those expire worthless, if they don't, shoot up over the $120 on Google and $750 for SOFI, then we'll lose all that premium. But I didn't want to include it because then it's just going to drastically, affect how everything looks here. So here we can see, according to our spreadsheet, we're down $32, but we'll jump over and look at the Robinhood account right now. Here we have the Robinhood account, and what you can see is the total right now is saying $40, but we have a little bit of discrepancies over here. So we did make a trade on Friday for Monday, which again, after kind of some self-reflection, I think that's probably not the best way to move forward. I think we need to go a little bit further out in time to have a lot more successful trades. And you can see this is already almost in the money. We're already almost in trouble. The market SPY is at 404, and this is only a 403, 402 spread. So again, a little bit of trouble there. Google, this one's down a little bit. So again, that's a little bit of the discrepancy there. And then the SOFI is actually up just slightly. So these trades will kind of be going on in the background. But overall, we had another crazy week. The week started with this huge gap down on Monday, and then we were looking like, oh, it's going to be another week where we just kind of creep up and actually recover back to around the 2K mark. We got as high as $1,988. And I honestly thought if all of our trades played out well on Friday, we were going to get back to that 2,000 mark. But overall, the market just did not cooperate. Jerome Powell had some bad things to say, and the market gapped all the way back down. So we ended off the week at $1,947. And if we look at all time, we are down. So we're down almost 3%, which is really less than $60. So a lot of these small trades that we're making, the account's not going to move a crazy amount. So that's kind of the good part, and it's fun to kind of trade around. So I really enjoy making videos like this, making trades like these, but they are not conducive to long-term success. You kind of have to, trade a little bit longer term, in my opinion. If you're trading options, you want to have time under your belt. You don't want these, volatile short-term moves to really affect your account. So that's why I think we'll start focusing on a little bit longer term trades. Hopefully that doesn't affect, some of the quality of the videos where maybe I can only make a video every 2 weeks now. But if you like what we're doing so far and you're enjoying the series, make sure you drop a like down below. Make sure you leave me a comment. Let me know. I really appreciate it, guys. And otherwise, if you like these videos, make sure you hit that sub button for more of them. And as always, have a wonderful rest of your day.